This is our Forex blog for June 27th, 2012. And like we do most days, we want to buy the strongest currencies versus the weak and sell the weakest versus the strong. This is our currency meter, which is made up of real-time trend, strength, and weakness on the top in histogram form, followed by 15-minute trend, hourly trend, daily, weekly, monthly. The real-time trend is made up of 5 of our best tools. 3 of them show the percentage of, in this case, dollar pairs that are going up or down versus the rest, and 2 of them show the intensity of that trend. One of them is about a 30 to 45 minute statistical intensity, and the other one is a bar by bar intensity. So those get averaged together. It's about half intensity, half directional, and it's kind of like force equals mass times velocity. If the majority of dollar pairs are going up and you're doing so with incredible intensity, that trend's likely to continue. It's more likely to continue when the 15 and hourly trend is showing dark green, which means a high percentage of them are going up, and the daily, weekly, monthly trend's up. Of all of them, the monthly trend's the least important to me, and I personally ignore it, other than sometimes I use it to trade a little bit larger lot size. So this is a sortable currency meter, which is released about a month ago, which allows you to sort this and see the strongest ones on top. The New Zealand, Australian, and dollar are the strongest. The Swiss, the yen, and the pound are the weakest. And on the hourly trend, the pound is going down against 100% of other pairs right now. So pretty clear. Very weak pound. The New Zealand was strong today. The Australian, the dollar for the most part, on all time frames as well. I don't leave running the pound Australian or pound New Zealand, but I do leave the pound dollar running. Some of our tools are live only, so we'll bring up the pound dollar chart. And basically, since you know that this one's weak, price is underneath the hourly here. It also had a false breakout last night above the 10-day moving average and came back down underneath it. It's also underneath the weekly pivot, which is the average price of last week. Here's the previous day's high up there. It's, wasn't able to break out above that either. All signs of weakness. And, basically look for trend sell signals. You can either sell it when it goes 1 pip underneath the low. In this case, you would have had a 7 or 8 pip loss. Short again here. You can see that last trade resulted from around 56.20 all the way down to the lows here at 71. 50 pip move. And too many traders care way too much about the winning percentage versus having a good risk versus reward ratio. You want bigger wins than losses, and don't worry much at all about the winning percentage. There's a lot of methods you can use. If you have a bigger account, you can start each week small lots. If you do well, you increase your lots over the week, so you have very big winning weeks. When the market's trending and very easy to trade, you have huge winning weeks. When the market's bad and you have a losing week, it's very tiny. And so because you don't progressively trade larger lots unless you're doing well. That's one method that I use frequently. And also know your stats. If you don't typically have more than 2 losing trades in a row, if you have 2 losing trades in a row, you can always trade larger on the next one and the next one after that. And you can also cut back the number of lots you trade on your first and second trade to much smaller than you do now, so that if you do have 2 losing trades in a row, you can trade larger, maybe the size that you normally now trade on your original trades. And if you lose on that, you can go a little bit bigger. That way, even if you have 3 losing trades in a row, your 4th trade is just a tiny fraction bigger than you are trading now. Again, that works much better on bigger accounts, $25,000, $50,000 or more. All right, so sell signal here. Use a trailing stop. You can see a light red sell signal here. This is a lower probability trade, and because of that, I mark it dark red and dark green for buy signals. They're riskier trades, so you got to use our build your own trend to see, okay, this is really weak. It's not underneath the lower containment band, but it's pretty close. This is a potential profit target here. Are you willing to risk 7 or 8 pips to maybe make only 10 pips? And once it makes a nice wave down like this and goes sideways, if you do short right here, most of the time you're going to it's not going to go beyond the 1.618 fib, which is right here. So when it came down really within about 2 pips of that, you really want to exit your trade right here around 64 versus 71. So you made another 7 or 8 pips just due to probability. Previous day's lows right here, the first time any support or resistance area gets hit, it usually acts as support. And our software is looking for decent sized pullbacks in order to continue those sell signals. So that's one currency. Let's take a look at the currency meter again. The yen is very weak now, but earlier it was very strong on pretty much all time frames. And patterns you want to look at on the currency meter are extreme strength at and above the 80 level. And any time you see two bars in a row that hit the 100% level, that is incredibly intense and very likely means that trend's going to last another half an hour to an hour. So if you see that early on into the new move, like right here, it's pretty safe to assume around 4:30 you're going to have another half an hour to maybe an hour, hour and a half of strength in the yen. So what was the weakest one at 4:30? Yeah, the pound really wasn't that weak then. I don't leave the Swiss running, so you can't show that. Well, we'll show the pound yen later. But that's the pattern that you're looking for. And anytime you see extreme strength followed by a little bit of weakness, strength followed by less weakness like that, those patterns tend to continue. You know, right here you have it too. Strength, very little weakness. Strength, very little weakness. Guess what? Strength came back. And the more longer time frame charts that line up, time frames that line up, the better your odds are. So let's take a look at the pound yen chart. Here's the pound yen chart. I have released a new version of our software yesterday that has more signals on it and different patterns. One of those patterns are anytime it has a multi-bar up-down ratio like this, up, down, up, down, up, down, and it's in a sideways rectangle pattern, it now spots breakouts. So when the pound became really weak and the yen was strong, when it breaks down through the hourly right here, it gave you a sell signal right here. You would enter pretty much at the close of that bar, and you can see this one went from 124.22, and you always want to draw your fibs. When this thing starts going down, I typically would draw my fibs on this, and I'm probably going to exit right here at the fib target versus giving back, you know, 10, 15, 16 pips of profit when the trailing stop gets hit. But that's just me. You know, I would have definitely exited half here, and because it's very likely to reverse after such a big move down, you know, I'm probably moving my stop here, and then when it goes sideways right here, I'm probably moving my stop here in the second half of the trade. You can also use our newly released volume profile charts as well. Let me bring that up and show you. Here's the daily pound yen, volume profile charts. These are daily bars with, our volume profile, which basically lets you look inside the bar. The middle area is called the point of control. It's where the most trading activity of the day happened. And then the upper and lower value areas where 68% of the trading activity happened. Sometimes you have very, very tight range where the most activity happened, and other times it's spread across the day. Yesterday, the point of control was 124.17, and so underneath there, you want to look for sells, and above there, you want to look for buys. So let's draw that on the chart. Also, here's the upper value area, 124.23. So basically, from 17 to 23, you really want to focus on buys, and underneath there, sells. So here's where it is on the chart. Let me just draw a little line across here, some approximately right around the 23 area. And by knowing that, when it broke out above that area, you could have, got into a trade here and made a little bit of money. This buy signal right here is more likely to work. So is this one. Those both went up, 20, 30 pips. You are in the chop area right here. You might have got into a trade here. It did go up about 8 pips. This one here would have lost. This one made money, and then you made 20 or 30 pips here. And the sell signal, once it breaks down underneath the hourly, and it had many times to go up. When it's above the value area, it should trend up. This one failed. In fact, it wasn't even able to get to our upper containment band. So it's, when it breaks down there, it's not strong enough to even hit the lower red 1.5 band. It's very likely to continue down, and of course it does. Because, and look where the low is today. You always need to know where these levels are so you don't get stuffed. The lower value area is 123.87. The low today is pretty much at that area. This is a key area. These are real areas of support resistance because it's where most of the activity happened yesterday. Probably only professional traders have this at their disposal, and without having it, you kind of, you might be looking to sell this area here, and you wonder why it's not going lower. Well, at least now you understand a little bit why that area held. It also was a Fibonacci area that I spend 30 minutes every night drawing on longer time frame charts so that you don't have to. So between the Fibonacci area, the monthly pivot level, and being the value area low of yesterday, major support here, and of course that's why it reversed. And so once it starts going down, you may or may not take these trades. When this sell signal here happens, you basically want it to go below those bars low, and it never does. Some traders wait for the trailing stop to get hit. I also would advise waiting for sell signals once it makes a big move like that, at least a 38 to 50% Fibonacci pullback. So this isn't quite at the 38%. If you had waited for this and gone short, you still would have had a loss. But when it comes up to the 50%, it goes slightly above that, and you get a sell signal here, at least you have the opportunity to get your previous loss back. And to close today's Forex blog video, this volume profile charting works on daily, weekly, monthly, intraday, 4 hours, hour, 30 minutes. It also works on range charts. So we have a 5 pips per bar range chart here. If you find out that the pound yen moves, let's say 130 pips a day, you might use 13 to 20, 25 pips per bar. Let's just put 15R on here. This is a 15 pip range chart. And by doing this, you actually see where most activity happened during the previous range. When this is coming down here around 10 to the lows, notice the value area. If you think that this is going to find support here and go up, you can buy the breakout of the value area right here at 123.96 versus the high at 01. That gets you in there 5 pips earlier. The value area center, point of control, is right here. You can have a stop right here using much bigger, 15 pip bars, and have intelligent based stops. It goes up, it goes up. Notice where the value area is, right near the bottom of that bar. During the next bar, as long as it stays above there, you stay in the the upward move, and here you get stopped out. That allows you, also earlier with your shorts, the value area keeps moving down. Price is not able to go above. Look where the point of control is and how much activity there is on that at that particular price. Lots of activity right here at 124.13. And notice it was not able to go above there, that bar and that bar. So being able to look inside the bar, I think, gives you a tremendous advantage over most traders. The only problem I've had in working this into my trading, and even with 4 monitors, the only way to really do it is to put those the volume profile charts on different layers. And when you're in a trade or you're contemplating whether to take a trade or not, bring up that layer, take a look at the where the value areas are and where all the activity are, where the real support resistance is, and then make your decision. You can put those next to all of your charts, but it gets a little bit too busy, I've found. So I put them on different layers, bring them up. If I'm looking for a trade and I don't see any on a range chart, I will look at a value volume profile chart to try to find some opportunities. If I'm not sure about a trade, I will look at the volume profile chart. And a lot of times, if there's a lot of activity or resistance 8 pips up, I'm not going to take the trade. I'm going to wait and see how that area gets touched. If it shoots through that area and then pulls back and can't get beneath it again, in other words, resistance becomes support, I'm going to look to buy that area, and usually that trade works. It doesn't hurt to miss a trade or two. Have patience, have discipline, and don't give back the profits you've made on other trades. That's the key.